Okay. All right. Okay, there we go. All right. So as I was saying, you want to make sure that before you sign any documentation, that you make sure that it checks out. Well, how can you do that? If you're working with a realtor should be able to assist you with that documentation. Some of the realtors are, when realtors are doing transactions, sometimes they may be limited to some of their real estate knowledge because realtors are trained to do everything in a conventional way. And if they haven't come across something that's unconventional, unusual, like this particular lender situation is unconventional, then they may not be able to advise you. But it's always good to have more eyes on a situation. Anyone that's in a situation or in a field or an industry that knows more about you, it would make more sense for them to lend some information, be a second set of eyes on something like that. So another thing is, like I said, I'm a real estate consultant. If you have a real estate transaction that you're going to go into and you're not quite sure, I don't know, I'm not used to reading contracts, I don't really understand real estate enough on a regular basis, and you just want someone to look at it, you can contact someone like me, a real estate consultant. I have many, many years in the field. I've done flips, Airbnbs, rentals, tax sales, stopping foreclosures. There's a lot of stuff. So a real estate consultant like me can take a look and see, and you can consult with me. I write contracts and I read contracts. So there you go. So anyway, that is a particular unusual foreclosure situation on someone calling the loan due and not giving an opportunity for you to reinstate the loan. Now, typically people have a bank that they have borrowed the money from. And so when they're ready to, if they have the money, if the foreclosure notice has already come out, they can reinstate the loan and then they can go on about their business as if it never happened. The only that would be documented on your credit history. If you were several days late, then the credit history, that'll just have to fall off as it goes. But you get to keep the property. Now, let's say you don't have the 10 grand. In this example, we're talking about $10,000 was needed to catch up the payments. If you don't have the 10 grand, then the loan modification is where you contact the bank and you say, hey, I don't have it, but I really want to try to modify this loan. Can you take what I owe and what I didn't pay and roll it into my loan? So if you had a loan, a mortgage is 30 years and you're behind that $10,000, you say, can we just kind of start over and take that and roll it into the loan? So if you had been paying and your principal payment had paid down into your mortgage, then you would take that $10,000 and you would put it back into the mortgage. So let's say you're at a point where you owed $100,000 on the mortgage. Now, if they agree to that, then you will put the $10,000 in there. Now you owe $110,000 on your mortgage and you can keep making your payments. That is called a loan modification. Now, loan modifications, though it is an option, sometimes can be very challenging. I hate working with banks. They're extremely annoying. It's not like you're talking to a person. You're talking to a robot. You're talking to someone that's not logical a lot of the times, or you might even be talking to someone that's not sympathetic to real life that's happening. I can't stand talking to banks. And I mean that from a professional and a personal level when it comes to these type of foreclosure situations. Now, it is possible, and you do want to try it, because if you have, a situation where you're trying to avoid foreclosure, then you want to try everything that you can so you can avoid the foreclosure. But yeah, just to let you know, sometimes they're not as reasonable, realistic as you'd like. It's going to be a lot of paperwork. Fill out the paperwork. They're going to ask you your financials, which is fair, because if you're asking them to not forgive the money that's due, but to say, you know what, let's call off this whole foreclosure auction and give you another opportunity to keep making your payments. What are your financials looking like right now? What happened for you to get behind? That's fair. That's fair. So that's what they're going to do. They're going to ask you to fill out a lot of paperwork with the loan modification. You do have to get approval from the bank for them to modify the loan. So that is one of your options, is loan modification. Now, some people will do buyback options with the bank. where they'll allow the bank to buy the house back. I just haven't done any transactions like that because every transaction that I've done has worked out well for me and the person I was doing the transaction with. There hasn't been a scenario where that made the most sense yet, but it is an option that some people like to do. I want you to know about it. There are short sale and deed in lieu options of what you have where the bank is getting the property back. So why would the bank say yes to that? Well, in order to put a house through foreclosure, a bank has to pay attorneys to go through that process. So they've got to pay thousands of dollars in the notices, getting people served, and well, not necessarily served, but making sure that their notices are correct. And the attorneys that have to actually go and auction off, they have to pay auction fees. I put a property through the auction before. It wasn't for foreclosure like this, but you have to pay the fees and go through the process. So the bank can save that money if they do a deed in lieu type of situation. And there are short sale options. So that's why a bank may consider doing something like that, and you save a lot of time and energy and everything like that. So what happens if, I'll come back to that. No, I'll go ahead. So what happens if the bank, goes through with the foreclosure and you're in the house? How long until you have to get out of the house? Well, if you are a tenant in the house and there is a valid current lease on the house, then the new owner has to acknowledge the lease. They can't just buy the house at the foreclosure auction and say you got to get out. That is to protect the tenants that were renting a house from the owners who weren't making the payments. So if you do have a situation where there is a foreclosure pending, you want to make sure that, let's say you're leasing a house and you get the notices and, oh my gosh, I didn't know. This actually happened with one of the properties that I have that I was supposed to get in the divorce, found out that he wasn't making any of the payments all those times, and the property is going into foreclosure. So the tenant got a surprise one day, unfortunately, that the house is going into foreclosure. And so I did let them know that, whatever lease that you have in a situation like that, it is valid, and the new owner does have to acknowledge it. So that way you're not nervous that if you get that notice for that foreclosure, that you're immediately going to have to move out. It doesn't happen that fast. Well, what happens next? Let's say you're not a tenant. Well, there's a process of eviction that has to happen. So if you are in a house and it does foreclose, well, the new owner, whether that new owner be another investor or it be a bank, they're going to have to go through the legal process to get you out, to evict you out of the house. So nothing is immediate. So, there's time. There's time to find a new place. There's time to make things happen. So anyway, I just wanted to touch on that because even though this is about avoiding foreclosure, that's avoiding getting all your stuff put out on the street. That's just a part of it. So just wanted to mention that. All right. So we've got TROs. Sometimes you got a situation where there's a foreclosure pending and you just need more time. For whatever reason, maybe as an investor, I found out about it and it was the last minute. That happened not too long ago to me too. Found out about it and it was the last minute. And it's like, if I just had more time, I could make this deal happen. Well, then you would need a real estate attorney to do a TRO, a temporary restraining order, to stop the foreclosure. Now, this is not a permanent solution. Obviously, if you signed an agreement to pay the bank or the investor to pay on that note, on that mortgage, and you stop making the payments, eventually they're going to get their house back. Because, the house was for this particular price, you borrowed this much money to get the house, they're going to get it back. But if you need more time, whether it's to get the money together or to get that transaction to go through so you can make sure that you don't lose everything, then a TRO is an option. So you would need a real estate attorney to do a temporary restraining order, a TRO, to stop that foreclosure. That costs, that's going to depend on the attorney, but you can expect to pay $2,000 for a TRO sometimes. It just really depends on what you're able to find, what the situation is. But if you want more time and it's worth paying that money, then that is an option to avoid the foreclosure. So when you're dealing with a foreclosure, you're working with against the clock. You're working against whatever that auction date is that they've given you. So another option to avoid foreclosure is to list the home with a knowledgeable agent. I say knowledgeable agent for a reason. There are a lot of realtors out there. I like working with some realtors. In general, I don't necessarily like working with realtors because I've come across a lot of lazy realtors. A lot of realtors are lazy and they will get a listing and they will put a sign in the yard and they may not do anything else. So you want to get with a knowledgeable realtor. And that's not the only reason. Some realtors I have called and called and called, and it takes forever to get them to return. It's like, how hard are you really trying to sell this house? Some people are overworked. Some people just don't run a business as well as others. So there are multiple reasons why I've run into realtors that aren't as professional as I hold my standard to be. So if you decide to list with a realtor, because that is a viable option, you want to make sure that you're listing with a realtor that is knowledgeable about the foreclosure process and the length of time that you're working with. You can't work with a realtor that's not going to be aggressive about getting this home sold because you're working against the clock. So when you talk, I say you're working against the clock because with a foreclosure in Texas, they only have to give 21 days before the auction. And, they have to give 20 days before the notice to say, hey, we're doing what we have to do to get this house ready for sale. But by the time they get an auction date, they only have to give you 21 days. So that's 21 days if you're at the last minute. Because remember I said there are notices that come out and everything. So if you're at the last minute due to whatever might have happened, this is no judgment. This is denial. This is job loss. This is family death. This is just not knowing what to do, stress, anxiety, whatever the reason is. If you're down to the wire and you're down to that 21 days, you don't have any time to wait on a realtor that's not aggressive about selling your house. So you can list the home with a knowledgeable realtor that knows some of those keywords to put in their listing about how to get the home sold quickly. There are certain keywords that they can put in the MLS listing, certain flags that they can do, notations that they can give, access to the home that they can give, those types of things. So that is an option to avoid foreclosure. Now, if you're saying losing my home, it's avoiding foreclosure. Remember, the process of foreclosure is where a home is delinquent in payments, it's behind in payments. And the bank or the note holder, lien holder, note holder, however you want to call it, has decided to say, hey, you're not paying. We need to get our property back so we can get our money out of this investment. So the foreclosure is the sale of the property. If your home goes into foreclosure, you've lost the home, you've lost your financial investment, and you've lost the credit because you have to say, I've had a foreclosure and it's going to be on there for 7 years. So avoiding foreclosure is avoiding all of those things happening. If you've gone through the process of getting a home, and that is no easy process. Getting a house is not an easy process when you're going through that lender and then underwriting and all that red tape, and you can't buy this and we can't put this on our credit yet, and you did. That's a process. If you have done that much to go through the process and get a home, why lose it to foreclosure? If you lose it to foreclosure, you've lost everything. So, of course, if you want to stay in the home and you're able to save it, great. As I said, there are some ways to save the home. But if you get to the point where you're not able to do either of those options, you wouldn't want to also lose the home and also lose the money you've invested in it. Why not get something for it? So that's what I mean when I say avoid the foreclosure. Before that auction date comes and that auction time comes, there's an opportunity to get something out of this transaction. Okay, so subject two. Subject to is a way to avoid foreclosure as well. Subject to means someone is buying or selling the home subject to the mortgage that's already on there. So that means that the mortgage that's on the home will stay on the home, and the person getting it is going to make those payments. So it means that we're not coming with brand new financing. We're not waiting on all of that underwriting that I just talked about. So if you bought a house and you know this lengthy 30 to 45 day process of getting approved, sometimes 60, you get pre-qualified, but then the loan has to go through underwriting and get it approved. That's a lengthy process. If you've got 21 days or the 41 days, because you're counting the time that they tell you they're about to do it and that they do it, if you have only that amount of time, that's not a lot of time to get the home ready and listed and sold and wait on someone with financing to come along and qualify. Because sometimes people come along and then they're not completely qualified. They'll go through the process, and then this underwriting process is, we found this issue or whatever. So that's a problem too. So that's what subject 2 is for. It says, okay, you know what, I tried, or I'm done. I don't even want this house anymore because I hated him. We lived here together. Whatever your reason is. If you sell a home subject to, that means it's subject to the note that's currently on the house, and it's going to stay there, and they're going to make up the payment. So what ends up happening? Well, you should probably get some money, and it depends on how bad you want out. Depends on how bad you want to keep your credit, whatever. Money in the transaction, whatever they give you to initiate that subject to deal. And you're going to save your credit, because your credit is not going to have a foreclosure on it. So that is worth a lot, because you can take that credit history that you have and you can move on to the next place without having to say a foreclosure. Now, the amount of points that you lose on your credit for a foreclosure versus having the mortgage that was so many days late, I wouldn't be able to answer that, because everybody's credit report is going to be weighed in different ways. So that's worth weighing too, to say, all right, if I do this subject to, then I get to at least put this money in my pocket. I at least get to walk away with some money to go find a new home, or get that RV and tour the country, whatever you're going to do. So you can't do that if the house goes into foreclosure. And like I said at the beginning of this video, I can't understand why so many houses are still going into foreclosure. So people must not be educated on how you can stop your house going into foreclosure. I know that when you get to that part, I understand that it is hard. It's emotional, it's draining, it's anxiety ridden. It is not an easy thing. You get all this junk in the mail, you get these notices of default, and you just don't want to open the mail anymore. I'm tired of looking at the mail, and people are getting on your nerves, and everybody wants to do this and do that. And then you got people out there that are dishonest. And it's like, who do I trust? Where do I go to? How do I know that they're not going to screw me out of this situation, out of this deal, out of my property? There's a lot to consider. But that's why you have someone like me, a real estate consultant, that gives free consultations, and someone like me that educates the community on knowing what to look out for and what to know for yourself. So you definitely want to arm yourself with information. There's no reason why you have to lose your home in foreclosure. Not today. It's too many options out there. It's too easy to find people, to look up reviews, someone that knows someone. It's way too easy. So you definitely don't want to allow your house to go into foreclosure. All right, so let's see. What else did I want to talk about today? I talked about that. The idea of talking and getting some counseling on the house that you have, you definitely want to find out alternative solutions. Don't go to only one source and feel like it's an end all be all, because again, you're working with a short period of time. So you don't want to assume that if you look, you call the mortgage company and they said something and that's the end of it, because I've already told y'all how these banks are. So you've got people that's just working and reading scripts and whatever. They may not even really understand the Texas real estate law enough to know what options you have available to you. So get counseling for, whether it's a HUD counseling agency or whatever it is. get some type of help in the resources so you can learn better about what you need to do with your particular house situation. Everybody's situation may be different. And that's why I say, as a real estate consultant, I'm going to give you a solution for you and your property. You know, everybody's property isn't going to be Airbnb-able or flippable or rentable. There are so many different optionsables that you can do. So that's why I really enjoy the fact that I have such a portfolio of things that I've done over all these years that I can provide and say, oh, well, you know, I always let the house tell me what it needs. I don't go into a situation. Some people say, well, do you wholesale? I will wholesale, but it doesn't mean I wholesale. I only wholesale. I don't go into a situation and say, oh, how can I wholesale that? That's not my goal. My goal is to get to the house and figure out, what does this house need? What does this family need? What does this situation need? And provide a solution for it. So as a real estate consultant and speaking to different real estate professionals, oh, this one will be great because I know that this market is hot right now. This area is hot, so it will sell fast. Or, oh, this will be great because this one, it can be an Airbnb easily. So we can flip whatever it needs. I let the house tell me what it needs. So make sure that you're not relying only on your own knowledge and that you get other real estate professional knowledge to tell you what you can do for your particular house. So let's see here. Consider refinancing as an option. It's an option, so I'm going to say it. It may not be as reasonable as some of the other ones because it takes a long time, but it definitely is an option. So if you're able to refinance and get your mortgage payments lower, then that's an option. Let's see, what else do I have here? Financial assistance programs, home affordable modification program, or the hardest hit fund, if you meet the requirements. So there may be programs in your area that you might qualify for. So you want to definitely look into those. The laws change all the time as far as to, you know, we're post-COVID now. So what are we going to allow? How many do they have in this grant program? What do they have assistance for? But just know to reach out to someone like, like me or another real estate professional that might have different options in their toolkit that you may not be kept up to date on. Filing for bankruptcy can temporarily halt a foreclosure and give an opportunity. So filing for bankruptcy obviously will not save your credit, but it may save the home, because if you back to needing more time type of situation, then that is an option that may work out for you. It just depends on what your personal situation is. So that is an option. Sometimes I've had a property not too long ago that the person, they filed for bankruptcy before I came into the picture to buy it. So I know it bought them. How much time did that buy them? It bought them a lot of time. It bought them, but there were some other things they ended up having. But anyway, the point is it bought some time. So there's an option there. Let's see. All right, so I think that's pretty much it. That's what I've got on in my toolkit as ways to avoid the foreclosure. I definitely want to caution against, this is a big one. There's no reason to pay someone to stop your foreclosure. Unless you're paying an attorney to do a TRO to buy more time, there will be no reason to pay someone to make the foreclosure go away and think that you're going to stay in the house, because by the nature of what a foreclosure is the payments are not made. So they need to get the property back so they can get their money out of this investment, this defaulted loan that they loan this money out on. So if that's the nature of what a foreclosure is, how do you pay someone to make the foreclosure go away? The foreclosure is not going to go away if the bank or the investor on that note, who owns the note, does not get their money. So that doesn't make any sense to think that you can pay someone to make a foreclosure go away. The process of doing a loan modification with the bank is a viable thing. And so if you're going to pay someone for their knowledge of speaking with a loan modification process, and that's what you choose to do, that is an option. But just know that the loan modification process is left up to the holder of the note to say yes. So no one can guarantee you that they will be able to stop a foreclosure just because you pay them money. That's not the thing. Unless that bank is getting all of their money, then that person won't be able to stop their foreclosure or the reinstatement. Did I talk about the reinstatement? Yeah, I did, because I used $10,000 as my example. Whatever that reinstatement is, whatever that amount behind is, you want to make sure that that person is making all of those payments up properly. So unless that reinstatement is made, the amount to reinstate the loan, there should be no money that changes hands in order for someone to stop a foreclosure. They should be paying you if they're going to get the house, if you make a transaction like that. But that's not a thing that you can pay someone to guarantee that they stop your foreclosure. The only way you can guarantee stopping a foreclosure is if you've gotten a recent reinstatement amount from the bank. And they will tell you how much the loan needs to be reinstated for. That's it. If you're not about to pay the entire loan, like the entire balance, the entire principal balance, and the attorney's fees, because at that point, when there's a foreclosure notice out, attorney's fees have already been charged. In order for them to file that, you have to pay those too. So unless someone's going to reinstate it and pay the attorney's fees, you should not be paying anyone. So that's a not ever thing. Okay. All right. I think I covered everything on my notes. Yay. All right. And I'm under time. So as I said before, I've had many years in real estate. I've had a lot of experience. I've done flips. I've done pre-foreclosures. I've had foreclosures. Meaning I lost properties in tax sale, bought tax sales, Airbnbs, rental properties. There's a lot of things that I've done. And so now with me doing real estate consulting, working with other real estate professionals, I enjoy the fact that I'm able to meet with other homeowners and bring them solutions for free, no cost to them, so they can see what options do they have in the situation. I can bring all of my real estate law knowledge and experience knowledge and just being a decent human being to the table. So if you or anyone else that you know is going through an unfortunate time with foreclosure, then you can set up a free consultation with me, Erica Powers, and I would love to come in and give you all of the things in my toolkit, all the connections in my toolkit, so you can have some options to try to avoid having to go through that type of thing. I can be reached on all platforms at the Erica Powers and also drmyrealestate.com. So set up a free consultation with me. I'd love to talk to you. Everyone's situation may be a little different, but the tools that we need to avoid foreclosure and what our options are, they're going to be the same. It's just a matter of what's the best solution for that particular time. All right. Well, thank you so much for tuning in to learn more about your situation, learn more how to avoid a foreclosure in Texas. And I will be happy to bring out more information and knowledge for free soon.